Okay, so this video lecture for our course, Cost Accounting and Control. So we will be discussing about our module number 2. So this is entitled Cost Concepts and Classifications. So for the overview, this module is about the different classifications of cost and formulas that are usually used in the cost accounting. So you will be learning about the definition of these types of costs, especially used for manufacturing, as well as its characteristics, which are also essential in identifying for costing purposes. For the learning outcomes, so you will be able to understand and familiarize with this different classification of costs, and as well as be familiarized with the formulas that are commonly used in cost accounting. So therefore, our contents will be focused on the classification of these costs and our cost formulas. So to start with our discussion, so let us talk about the classification of costs. So before we proceed to the classification, let us first define what cost is. Okay, so if you could remember in our module 1, we already introduced this term. Okay, but in this module, we will define it comprehensively. Okay, so when we say cost, this is the amount of cash paid or any liability that is incurred for a commodity or service. Okay, so this is what we call cost. So again, basically, cost is what an item, okay, is valued or measured in terms of amount. Okay, so the commodity or service will obtain sale in the future. So in generating sales or revenue, before you can, for example, sell a particular product, first you have to purchase. For example, if you are a manufacturing firm, you have to purchase raw materials, pay for the labor and overhead costs in order to transform this elements of production into the finished products, which will then be sold to the customers. That's when you will generate your income. But again, the premise is that before we can generate income, first we have to incur costs, okay, in producing the goods. And if you are a merchandising company, you have to purchase first also your inventory, okay, and then that's what you are going to sell to your customers. So again, cost is the first step, or incurring of cost is the first step in generating income. You cannot generate income without incurring or spending for the costs of your goods or services. So costs can be in the form of a capital, okay, because this is what you are putting into as an input, okay, to produce an output, which is your good, and then that will be the item that you will sell or offer to your customers to generate income or profit. Okay, so in other words, it represents the amount invested on our product or service. So this is the benefit also of which has not been fully utilized or consumed in connection with the realization of sale or revenue. So if you could still remember in your basic accounting, we have what we call the matching principle. Okay, meaning you cannot recognize the costs unless there is a related sale on that item, product, or service. So, meaning, for example, you have the cost, okay, for producing the product. Once this product is sold, that is the time that we will also recognize the cost. This is matching principle. While if this item is not yet sold and still in our inventory, so meaning the cost is still in the asset in the inventory. So therefore, the cost will not be recognized yet. Okay, so that is the matching principle of cost and revenues. Okay, so that is a principle that we are using in accounting. Okay, so cost is a foregoing measured in monetary terms. Okay, so this is incurred or potentially to be incurred to achieve a specific objective. So this definition of cost is given by the American Accounting Association. In our module 1, cost was defined by CIMA London. Okay, if you could still remember. So again, in this definition, they focus on the measurement of the items or the capital or the cash paid in monetary terms. Okay, so again, the purpose of this later on is for the determination of the cost and for recording this transaction in our books of accounts. Okay, so cost refers to the monetary measure of the amount of resources given up or used for a specified purpose. So this is the value of the goods or service expended to obtain current or future benefits. So again, this is what we have been talking earlier about. Before you can generate income, first you have to spend or incur costs. Okay, so cost can be classified in different ways. So as we go along, we have the different classifications of costs. So there are manufacturing costs. We also have non-manufacturing costs, direct and indirect costs, product and period costs, controllable and uncontrollable costs, fixed and variable costs, and many more. Okay, so we will be discussing each of these as we go along with this module. Okay, so that is for cost. Okay, what about an expense? What do we mean by an expense? So, expense, this is the portion of a cost which has been expired as the commodity or service is consumed in the operation of a business. Enterprise consumed portion is converted into expense. So this will be charged to the revenue of that period in which it is consumed. Okay. Earlier, we said that cost is the capital, okay, for producing a product or rendering of the services in order for the entity to generate the income. And we also mentioned that the cost under the matching principle, that once there is no sale yet of that item, we cannot recognize the cost because the cost is still in our asset account under the inventory. What about expense? Expense is that is also part of the cost, okay, of manufacturing the goods or rendering of services. But these expenses are being consumed in the operation of a business. And these expenses are not capitalized in the asset account. Meaning to say, these are the amount spent by the entity which are not qualified to be capitalized in the inventory account. Instead, they have a separate account like miscellaneous expense, depreciation expense, what else? Salaries and wages of the administrative officers or personnel. So, in this case, these items are not part of the production and they are not qualified to be accounted under the inventory account because they do not belong to the materials account, the labor account and the factory overhead. Although they can be part of the factory overhead, but there are cases in which these are not actually allocated to the production. So that's why they have their separate account, expense account. So this is what we call expense when incurred. Okay, so we recognize this expense immediately in the period in which they were incurred. Again, expense when incurred. They are recognized as expense in the period in which they were incurred. Unlike your cost can either be recognized, but a sale must take place. Okay, and if there is no sale, these costs will still remain in our asset account under the inventory. Okay, so that is cost, while expense are expenses consumed in the operation of the business, and that is not actually allocated in the cost of production. Okay, so they are recognized immediately in the period in which they were incurred. That is an expense, not capitalizable amount of cost. Okay, so this will be charged to revenue, okay, for a particular period in which they are consumed. Meaning, for example, this year we have expense of 100,000. So all of this will be deducted from our revenue for that year also. So there is no portion of that 100,000 that will be remained in the asset account. Unlike your costs, provided there are still inventory left. So those inventory that were not sold in this period, the cost of that inventory also will remain in the asset account until they are sold. So that is the main difference between a cost and an expense. Okay, so in a nutshell, expense represents the portion of the acquisition of cost of goods or service which have been expired or consumed or utilized in connection with the realization of the revenue. Okay, so those are the expenses. Okay, what else? Difference between cost and expense. Okay, so we have here again, in this portion of our module, we will reiterate what our cost and expenses are for you to be able to understand it clearly. Okay, because it is important for you to distinguish between a cost and an expense, especially in the accumulation of cost later on, if we will include it under the product cost or as a period cost. Okay, so cost means the total amount of money or other resources that was used, okay, to procure something or to achieve some objective or to produce the product or render a service. So the word expense is also used to denote almost the same thing. So the difference between cost and expense is that when the benefit of resource is given up, can be realized in the future, or there is a benefit in the future that relates to the cost, we refer them as cost. Okay, meaning once you incur this cost, it will have a benefit later on. Okay, so this is an example of producing a product, and once you sell this product, you will receive a benefit in the form of revenues. While those resources that were incurred or the money that was spent, which has no future or potential benefit, that is what we call an expense. An example of this is your utilities expense. Okay, so utilities, for example, payment for electricity, water, and telephone. So this is a postpaid type of payment, and normally an entity is paying for this utility because they are using it. This is like their basic needs. Okay, however, upon paying and incurring for the electric bill payment, so there is no future benefit because what we paid for is what we have consumed in the past. For example, in electricity, we will only be determining the amount of electric bill or due after a certain period of time in which you already consumed electricity. Okay, so that is the time when we will pay for it after we have consumed it. So upon paying the electric bill, there is no future benefit that you can get out from that expense or cost. So that's why it's called expense. Okay, while in the cost for production, like raw materials, you have spent for purchasing materials to produce the product, and then this product will be sold, and then if it is sold, you will generate income. That is cost. Okay, so please make a distinction or understand the distinction between what cost and an expense is. Okay, so again, cost are the amount of money or resources that is spent and will have a future benefit, while an expense are resources that were also used but it has no future benefit. So that's why it will be recognized in the period in which they were incurred. So thus a cost and an unexpired expense, and an expense is the expired portion. If you could still remember also in the adjusting entry, I think. Okay, so we can also relate it, for example, prepayment. Okay, in the prepaid expense. Okay, so you pay for an item or an expense in advance, like payment of rent in advance rental payment. So that is an example of prepaid expense. So while we we have not consumed the rental yet, so that payment is still in the asset account. Okay, so it is an expired portion. However, as the time passes by and you have consumed, okay, and used the space for rental, okay, then that portion of the prepaid amount, which relates to the period that you also consume or use the asset, so that will be our expired portion, and that will now be considered as an expense. Okay, so for example, in the rental or the prepaid expense in the rental, okay, so your entry initially upon payment is prepaid expense, rental, credit to cash. And then after a certain period of time in which you have already consumed, okay, the rental, then our adjusting entry will be rent expense, credit to prepaid rental. Okay, so that's the transfer of cost to expense. Okay, but in cost accounting, what you should understand here importantly is the distinction between what a cost and expense is, because a cost is accounted as capitalizable amount in the asset account unless that item is not sold yet. Okay, while an expense is an amount spent which has no future benefit. Okay, that's why it should be recognized in the period in which it was incurred. Okay, so please take note of the difference between these two items. Okay, so to further explain, okay, to add to your understanding, so cost is defined as the benefits given up to acquire goods and services. So these are measured in terms of monetary term by the reduction of asset or incurrence of a liability. So here, reduction of asset because you have used this to pay for the acquisition of the goods or service. Incurrence of a liability, meaning you have incurred or you have acquired the goods or service but you did not pay for it yet. So there is a liability for it. At the time, the benefits are required. So at the time of acquisition, the cost incurred is for the present or future benefit. But the main idea here is that you should always look into the idea that if this acquisition will give benefit in the future or benefit in the present period. Just make sure that it has a benefit, okay, when you spend or incurred these costs. Okay, that is cost. So when these benefits are received, the cost becomes an expense later on. Okay, so in other words, cost represents the amount invested in obtaining a product or service which have not yet been expired. So, or for the benefits or services for which they have not yet been received or which have not yet been utilized or consumed in connection with the realization of the revenue. So that is still the, or that are the cost. But again, once they are expired or consumed, or for example, the item was sold, then that is the time that we will recognize a cost, just like an expense already. Okay, matching principle. We have here an example. Okay. So, for example, if a machine is purchased for $100 on the January 1st of 2021, and its estimated useful life is 10 years, it has a scrap value of $10, and at the end of the 10th year, $10 are paid for its installation. Then the cost of this machine on January 2021 is 110. This is January 2021, not 2001. Okay, 110. Okay, but this cost on December 31, 2021 will be 99,000 because that's 110. Okay. Because after a year, we all know that the machine will undergo depreciation, and under the straight line method, so the total cost of your machine here is 110,000 divided by 10 years, so that's 11,000. Okay, so to obtain the book value of our machine at the end of 2021, so we will deduct the depreciation related to it. Okay, so prepaid expenses involve or inventories of various kinds, properties, and other assets represent examples of cost. Okay, but in this example, our cost is in the beginning of the year, that's 110, and then a part of it at the end of the year, which relates to our depreciation expense, okay, which is 11,000. That is the expired portion, and it's now an expense under the depreciation expense account. But 99,000 is still the cost, okay, for the machine, because these are still an unexpired portion of the asset. Okay, so that is the example. What about an expense? Okay, so an expense, this is an expense defined as the cost that has given a benefit and is now expired, or it has no future benefit. So unexpired cost that can give benefit in the future, we mentioned it that it will be under the asset accounts still. So here, the depreciation of our 11,000, okay, in the previous example here, this is the expired cost for the machine for the year. Thus, it will be classified as an expense. In other words, expenses represent the portion of the acquisition of cost of goods, property, or service that have expired and have been consumed or utilized in connection with the realization of a revenue. So we have here an example. So suppose a machine that is purchased on January 1, 2018 for 1 million. So transportation and installation charges are 10,000, and therefore its total cost is 1,110,000. Suppose the annual depreciation of this asset is $10. So the cost of the asset after a year, okay, basically December 31, or it could also be on January 1 of the next year. So it will be 1 million because we will deduct the 10,000 depreciation for it. Okay, so this is the expense. Actually, this is just the same as in the first illustration or example under the cost. Okay, so you just have to take note between the unexpired and expired portion of the cost of the item. Okay, so this is for the distinction between costs and expenses.